to Shuba first, as we know that currently the global economy is slowing down and it also impacts to the Indonesian coal export market economy. At the same time, an interest rate hike will also add the company's burden. So how do you see the resiliency of mining companies in Indonesia?
Sure. So the financial performance for most of the coal companies has been very strong so far in 2022, and we expect them to continue to remain very robust in 2023 as well. And most companies have been able to accumulate a very healthy cash balance, and they are doing some early liability management, reducing their debt and reducing the interest expenses. So we do see that there would be some impact of inflation on the mining cost, but at the same time, when we expect the oil prices also to moderate, which is also one of the key cost drivers for mining companies, overall, we think that the cost should be manageable for the miners in 2023. And for interest rates, in fact, the higher rates lead to lower bond prices. And with that, some of the companies are in fact buying back bonds and deleveraging, given their strong cash balances. So with this and the sector's very moderate debt levels currently, we don't see a huge impact of higher interest rates on coal companies.
Okay, Dilip, one of the reasons for the increase in coal prices is the increase in gas prices, as you mentioned before, and also a colder winter in Europe. So, Dilip, do you see is there an increase in demand for coal from Europe, and what are the specifications? Do Europe ask for high calories? Do you think the demand can be fulfilled by coal from Indonesia? Because as we know, the specification that Europe needs is high calories.
See, the natural gas prices have been fairly volatile. And the supply has been very wavy. And the prices have actually shot up to record levels. Now, if you take those levels and you try and equate them with what is the economic price at which people can still use coal, it does appear that it is affordable to use coal even if the coal price today is at $450 or $500. So I would think when we are talking about substitutability of gas with coal, wherever the possibility is there, I think some of the players definitely, some of the consumers would be considering that and have probably done it as well, which pushes up demand. Now, when we look at the projection of winter, as you asked, I think the portents don't appear very encouraging. The autumn, which was benign, relatively more benign, is leading to prospects of a more severe winter. And there are noticeable signs in Europe where winter has come in North America, where there has been snow in places like East Canada. And we are seeing China hitting temperatures of minus 47 degrees. And we are seeing signs of some nervousness from consumers of coal from East Asia, where there is a pickup of security orders over the winter from nations such as Japan and a few others. So I would think that in the absence of appropriate alternatives which are affordable and the unreliability at this stage of the renewable sector, the pressure is going to come on coal, but most unfortunately, coal capacity cannot increase in the demand that is being generated. So that means that supply will always be far less than demand. And as Shuba said, the chances of a robust coal price and a robust demand for coal are very bright in 2023. And if you take my personal view, I have a feeling that it will continue right up to the point we reach a just energy transition stage, which could last up to 2040 and beyond. In the absence of funding, in the absence of new capacities, I'm afraid that's the way it will go. And power demand across the world will definitely keep rising as standards of living increase and the population goes up.
Okay, Shuba, how do you see is Indonesia is possible to take the opportunity to fulfill Europe market, and how is the impact of coal price volatility on the financial performance of coal companies in Indonesia, particularly at the end of this year?
The financial performance of the coal companies, as I mentioned, is still very strong. Though, as Park mentioned, that it's not growing, the volumes are not changing, but we are seeing that the operations have been very stable. And with that, we see that the financial performance of the companies would continue to remain strong, and especially with very low leverage the sector has currently. We see that 2023, the financial metrics for the sector should remain quite robust. And as I mentioned, for Europe, Fitch view is slightly different. That we are expecting that the weather might be slightly mild in Europe. However, the demand from the other region would still continue to remain strong, supporting our expectation of strong prices in 2023.
Okay, Dilip, amidst of the projections in coal industry still robust, do you see what are the obstacles in coal production so far? Is the weather such as La Nina as a main factor?
Well, I think Indonesia is largely open-cut mining, and we are the largest producer. And I can tell you that our capacity to produce organically from our two major mines is 90 million tons. And we did about 83, 84 million tons in 2020. We dropped it to 78 million last year when the La Nina started from Q4 and has continued right throughout this year. And when we are looking at the end of this year, we are looking at really between 70 and 74 million tons, which means that we have dropped from original guidance by at least 10 or 15%. And when we are looking at next year, we are seeing the current monsoon period. Hopefully, if it ends by February, we can look at a number of maybe about 80 or 80 plus. So for us, weather is the key issue, followed by equipment. Because we have to take rain mitigation measures. And for rain mitigation measures, you require equipment. And equipment is not available. They've got very long lead times. And Indonesia has limited life of concessions of 10 years and then maybe another 10 years and things like that. So it's very difficult to plan long term. Therefore, a combination of what you call rain mitigation, equipment, and there are also issues sometimes with mining operators on equipment and their ability to perform. So we are seeing prospects of challenges in 2023. So we've tried to address as much of those as we could have in 2022 to see that we can hit levels which are higher when the weather is drier, hopefully from March onwards, and get back to levels of between 80 and 90 million tons rather than be stuck at between 70 and 75. All this means is that if you superimpose Indonesia on its DMO, which is the domestic market obligation, where we are supplying coal at subsidized prices, which are quite different to what the international prices are, what it means basically is that just like there was the export ban in January this year, the most coal companies are actually assigning the highest priority to meeting the domestic market obligation, such that they can obviate any risk of a potential export ban. So therefore, what happens is, even if there is rain, even if output is impacted, you are still supplying normal quantities domestically, and it is the export market which is at risk. And that again leads to a further spurring of demand internationally and keeps the prices up. I know that there's a mention of Australia, but Australia have had their fair share of weather and infrastructure related issues. And they still have to sort out their problems with China. So, and China is putting in so many of coal-fired power plants that they're going to be requiring coal anyway. And while India has said that they will increase production, but that takes time. They have a few bottlenecks to overcome. So I suspect they will continue importing, may not be at the same quantities in previous years, but at least at levels close to them. Mm-hmm. And coal becomes a fallback. Renewables, I've already said, it's difficult for them to make up. They are unreliable. And that's also impacting Europe because maybe they made a few poorly thought out feedstock decisions in the past, which they are trying to correct.
Okay. Shuba, how is the debt rating and outlook for coal mining companies in Indonesia given by Fitch ratings? Amidst of the green energy transition trend, are Indonesian coal companies still able to grow sustainably?
Sure. Thanks. We don't expect any major growth in the coal companies, but we do expect most of them to maintain stable operations. And this is in line with the company's expectations as well, as most of them don't have any major expansion plans to grow volumes. However, we think that most of the future investment plans for some of the companies would be towards diversifying beyond thermal coal. And we think this is where the future investments would be directed for some of them, which have initiated certain diversification plans already. And whether those will contribute into potential growth or not, it's a bit early to say that.
Okay. Dilip, in securing domestic supply, the government requires a 25% of domestic market obligation. So, so far from the industry, how is the readiness?
Well, it's an obligation imposed by the government, and I think for very right reasons. Indonesia has a natural resource, and 75% of their power comes from coal, so they need to protect that. I think the only issue in the past has been that the policy has never been fully implemented, where there have been punishments meted out. But I think we saw the first signs of an export ban this year. And I think the government is also responding in a way quite favorably, by way of trying to even out and level the application of the DMO policy across all producers. And the second one is, while they've also recognized that while the prices are low for supplies to the government electric company and to maybe fertilizer and some others, there is a need to sort of even the costs for the producers so that they can be incentivized, to supply domestically. And there they have a BLU policy that is being talked about, which could get implemented at the beginning of next year, which should also, if implemented in the right way and with the right processes, can be beneficial for the development and for the stability of the coal sector, because coal will be around really till Indonesia moves beyond coal in 2070, as they have committed into COP27 and before.
Okay, Dilip, to securing, and also do you see that the industry take the projection of coal price in this year? How do you see amidst of the increase of demand? In brief.
Sorry, can you repeat the question? I didn't quite get it.
So what is about your coal projections in the end of this year and also for the next year in the brief?
Well, for 2022, I've already mentioned that we expect to be in the early 70 million tons. Now, out of the 70 million tons or so, or 72, 73, whatever we do, 25% is sold domestically. And much of that, we are the largest producer and supplier to PLN as well. And much of that is at the controlled prices. So really, it is the remaining 75% that is exported, and we export that after we have met our DMO every month.
Okay.
So if we are talking about prices, if we get international prices, our prices can be in the range averaging for our quality of coal at 180 to 200. But what we are actually getting, if you take the weighted into account, we are looking at something like 120, 130, which is still 100% above last year.
Okay.
And if we are looking at 2 years before, it is almost maybe 2.5 times higher. But had it been purely at international prices, we would be looking at maybe $180 to $200 a ton. The second factor which has hit our company really is the increased royalty rate, which is applicable only to our company this year. So our royalty cost has gone up by 11% on our gross revenue, and no other coal company actually is subject to that levy this year. Maybe next year the field can level out. But in spite of that, in spite of a lower volume, in spite of the controlled pricing and the supplies to the domestic market,
Okay.
and in spite of the rain, we have still turned around from a loss in 2020 to a profit in 2021. And we expect our profit to be at least 3 or 4 times higher at the end of this year, largely due to the price factor and largely due to the efficiency measures that we have put in.
Okay.
And next year, since we've settled all our debt, as Shuba said, we are the first to do it.
Okay, what
We
an
should be
optimistic
saving another
target.
$200 million. We should be saving $200 million a year next year on interest anyway. So we expect our prospects to be bright in 2023.
Okay, what an optimistic target. Thank you for the insightful dialogue. Thank you for making time for CNBC today. Mr. Dilip Srivastava, Director and Corporate Secretary Bumi, and also Ms. Shuba Sethi, Director in Fitch Ratings, Asia Pacific Corporate. Stay healthy.